Ed, you think that the June lows marks a new bull market? What is the context of this bull market? What do we need to see in terms of the inflation picture, for instance, in order for this bull market to be a bull market?
Yeah, well, look, we had a very significant bear market earlier this year, first half of the year, basically. But I think it did make a low on June 16th when we fell to 3,666, which was, by the way, 3,000 points higher than the previous bear market low, at least on an intraday basis. I think clearly what we need to see is for continuing moderation in inflation. The jury's still out on whether inflation actually peaked early in June or so. I think most investors were hopeful that was the case, and I think it's one of the reasons that we've had this bull run. But clearly, inflation has to continue to moderate, and the Fed, in that context, should deliver one more rate hike in September and then pause to see where we are.
So you're a believer in a pivot. You're in the pivot camp, Ed.
Well, I don't think the Fed's going to be lowering rates next year. I think the Fed's going to raise them to around 3% and then probably keep them there. I think we're going back to a much more normal environment. I don't think we're going back to zero interest rates. And I don't think we're going to get back to 2% inflation rate anytime soon. So I think the Fed's going to have to keep interest rates relatively high. And I'm in sort of the slow growth rather than a terrible recession outlook.
How does what's going on in Europe, I'm curious, affect, if at all, your view of what goes on here in the United States? I mean, if we're looking at, for instance, nat gas prices, we were just talking about that earlier in the show. There's 7 times what we're paying for in the United States, and we're paying high prices. It's only going to get worse in the wintertime. They're facing real recessionary fears. Does that influence your view?
Yeah, absolutely. I mean, I've been thinking that there's a much greater likelihood of a recession in Europe and in China than there is in the United States. And that's obviously going to have an impact on us in terms of bringing the economy down through weaker exports. However, it's the good news in their misfortune is that's likely to bring inflation down on a global basis, which helps us quite a bit.
In terms of your views and price targets on the market, it sounds like it's basically treading water till the end of the year, but we will hit new highs next year. Is that how you would say to position yourselves? And do we go with what has driven the past bull market for this new bull market?
Well, you know, it's very hard to play corrections, and it's also hard to play bear markets in the sense that you have to be smart enough to know to get out at the top and to get in right at the bottom. And I think there's a lot of FOMO out there, a lot of people who wished that they'd gotten in June 16th and that they hadn't gotten out prior to that. I think we're going to continue to see that because valuation multiples are not cheap again, they're running around 17.5 to 18, and earnings, I think, are going to go flat. I don't think they're going to go down. I think in a slow-go economy, they're going to go flat. Put that all together, and you do have a market that probably goes sideways for a while before moving on to new highs next year.